It's time to take a look at your money this morning on Good Morning Quad Cities. And we start this morning with a recap of the recent stock market sell-off. Over the past 2 months, the S&P 500 has fallen nearly 10%, the NASDAQ has declined more than 16%, and the Dow Jones Industrial Average has fallen nearly 9%. The ongoing crisis in Ukraine and Russian President Vladimir Putin's invasion continue to disrupt the global financial markets. And joining us, as he does every Monday morning, is our financial expert, Mark Grywacheski with the Quad Cities Investment Group. Mark, good morning, and what are your thoughts on this latest ongoing sell-off in the stock market?
Good morning to you, Josh. Good to see you again. Well, looking at the pre-market indicators right now, Wall Street is bracing itself for yet another rough day in the market. Right now, the Dow Jones Industrial Average is set to open up about 500 to 550 points lower, and we are seeing that that similar weakness in other markets around the globe. But the sell-off really started kind of in late December, early January. On that expectation that the U.S. Federal Reserve would need to be much more aggressive in raising interest rates to get this inflation under control. But the second wave, so to speak, Josh, of this sell-off is from the destabilization of Eastern Europe by Putin's advance into Ukraine. Now, this crisis will impact the U.S. economy, but to what extent is fairly dependent on Putin. Is Ukraine his final objective, or does he try to bring in some of those other former Soviet bloc countries, such as, Georgia, Moldova, back under Russian control? And we're seeing that apprehension reflected in the stock market.
What do you think might be the biggest impact to the U.S. economy from this ongoing situation in Ukraine?
The biggest impact far and away is going to be on inflation. Look, inflation is currently at 7.5%, a 40-year high. And one of the major concerns, Josh, is on the disruption to our supply of crude oil. As of this morning, the price of crude oil is quickly approaching an all-time high. And this surge in crude oil has many concerned that this could push our rate of inflation to over 10% in the upcoming months.
And Mark, we've been talking about rising gas prices. We've all felt it at the pump as of late. How specifically will all of this impact the average American?
Well, one of the biggest misconceptions is that the crude oil industry exists in some type of singular bubble. But in reality, Josh, a barrel of crude oil is refined into those many distillate products that impact almost every facet of our daily lives. You look at, gasoline and diesel fuel, heating oil, chemicals, plastics, just to name a few. But also manufacturing costs will go higher. Shipping and transportation costs will be going higher. And ultimately, Josh, all of those higher costs get passed on to the consumer in the form of higher retail prices.
And the American Automobile Association is reporting that a gallon of regular gas now stands at $4.07 a gallon. That's the highest national average since 2012. Now, Mark, the big question for you, do you think these high gas prices are going to be with us for a while?
I hate to say this, Josh, but unfortunately I do. And I think, gasoline prices are going to be going much, much higher. Look. Back in 2018, Josh, the U.S. overtook both Russia and Saudi Arabia to become the world's, single largest producer of crude oil. But today, U.S. production has significantly declined. We're now increasingly reliant on Russia and OPEC. And OPEC is led by Saudi Arabia to meet our crude oil needs. But with the ongoing situation in Ukraine, Josh, do we stop getting that crude oil from Russia and OPEC? And remember, OPEC has those very close ties with Russia. And that's something that the Biden administration needs to answer. If we're not going to produce that crude oil here in the U.S., where are we going to get it from?
Great question, and it's going to affect us all. Mark, thank you as always for your insight. We will see you next Monday.
Good to see you again, Josh. Enjoy the rest of your week.
You too.